Hello, and good day. I guess it's a rite of passage that after a while, recording videos about trading, about market structure and price action, and reading areas, sensitive areas in price, you want to do lessons, teach what you've learned and what you've been applying in the markets while trading. So, and then there's me doing this, and I thought I would do brief lessons that can jumpstart your, diving into this sort of pure price action trading that we're doing based on market structure and specific configurations and areas in price that can provide easy targets and objectives for our trades and entry models and so on. So it all starts with identifying a general trend in the market. So let's talk about identifying a clear bearish trend or bullish trend. And how do we do that? Well, the market moves in waves or in expansion phases and then followed by pullbacks. And the classic drawing that you see everybody do is this, where price goes up and down with the lower lows and lower highs until at one point a flip happens and the market changes direction. So you might have seen this before. This might not be new to you. If it is, then welcome. It's a fantastic framework to study price action and getting closer to trading. And what I highlighted, I was looking, scrolling back to find a clean price action that identifies what people tell you it's a clear trending price action, and you will see that we will zoom in and just analyze what's happening. But you have a general sense when you see this, you come to the chart at 10, you wait for the open comes, and then you see that price keeps going down. You have a general sense that we're in a downtrend. And how do downtrend work? There's expansion phases and then pullbacks and then continuations. And this happens until the trend changes. So if we look exactly how this happens. First, I want to say that all these drawings that you see on the chart are not drawn by hand. You could and you should train your eyes to see and draw this yourself, but nowadays there's tools that can do most of the work for you. I developed with a lot of sleepless nights and long weekends an indicator that sort of tracks market structure and much more for you. So that's what we're going to use for these lessons. So the market structure is actually drawn not by me, but the code I wrote that helps me identify it automatically without work. Just don't mind that here it's called Market Structure Pro debug version. The one that TradingView has approved is called SNDR and Origins Pro for reasons that I don't understand. They don't like. I titled that's too generic, but enough of that. So what is a downtrend market or an uptrend market? It's a market that expands downside, and then there's pullbacks and then continuations. The important thing to note is that for a valid pullback to happen, we need to make sure that the last candle, in some schools of market structure, the last down close candle needs to be closed above. In other ones, it doesn't matter the color of the candle, you just need a close above the last candle to confirm a valid pullback. And then what this identifies is a point in the market that will identify a continuation. So when price will close below this line, we will say that the market is continuing the trend. Once the market has closed below the line that identifies a continuation, we can sort of say that the line, the high left between these 2 points, because the price has just indicated that they want to continue the trend, is less likely to come and revisit or at least breach this high level. That's why we often call this protected level. Now, after price then develops this, if we start looking at market structure, once we close below here, this will become a protected level. And if we keep tracking price, you notice that the same thing happens many times. This is the last candle before the pullback. We close a candle above it, so this qualifies this as a new bearish zone. And then once we close below it, the trend continues. Now here something interesting happens. There's a pullback. We have the last, in this case it's a down close candle. We close above it. So we have a pullback. A new zone will be confirmed once we close below this one. But if you notice, price comes up until the highest point of the previous zone and cannot close above it. So this level was a protected level, and price does confirm that there was a strong intention for entities in the market to protect this level from being breached, and price continues to the downside. We close below, we create a continuation, which is this candle, and immediately we close above it. So this qualifies it as a small zone that just breached and continued immediately. And we continue, and then there's a pullback. So this candle now gets closed above, so now we have a pullback. So now when this candle gets breached, this high becomes protected, and price should not, if the trend needs to continue, should not breach it. There's many rules and many things that can happen. We'll talk about it in due time, but this gives you a sense of what is a downtrend price action. So it's the same as this. We go down in waves, we close below the continuation candle, and then we have a pullback, and this can continue for quite some time. Some people count how many zones before a possible reversal will happen, and at one point we reach a point where a certain low is put in, the low is breached, price comes back to a level that should have been protected, and that level does not hold, and it is violated, and price closes above it. And this means that we have, in some schools it's called a market structure shift, in some schools it's called a change of character, in some schools it's called a flip. But what this means is that if it's a real indication of a change in market trend, then the price should start to move up and create bullish zones instead of bearish zones. There's many different things that we can talk about here. There is a famous construct called the breaker for people following the ICT School of Trading. There's other things that we can talk about, but for now let's just focus on the market structure. So we flipped the market structure from bearish to bullish at this point. We come back to retest the zone, call this, some people probably in the lower time frame, this down close candle is the SNDR, the area responsible for breaking this zone, and then we keep going up, and at one point we are able to close below this candle, and that creates a valid pullback. And once we are able to close above it, this level becomes a protected level. and up we go. And the process repeats on the other side of the curve. It's exactly how I have highlighted here. This is my very quick introduction to market structure. There's probably many things that I should say here that I haven't, but I think it's a good start, right? So there's one thing I want to show you, and that is a zone, let's say, where there was a pullback. Means what it indicates is that the market had a stop and started breathing there. So there might be people or entities or that might want to continue their trading in that zone where if price should come back to it. And so generally in this school of trading, you can consider that the zone that hasn't been revisited until at least the 50% at one point might get revisited, and you might get a reaction if price returns to the 50% of an area that hasn't been tapped by price. So here we had a very strong continuation. Now let's start from here. For example, we had a move to the downside. Price came back to the 50% of this area, created a double top, and continued to the downside. Now this zone hasn't been revisited. So it means that there might be entities, the entities that accumulated here for shorts. They might have more orders to sell to pair with people that want to buy around here, and this will push in turn the price down. So we might want to keep an eye on areas or zones that have not been mitigated, or let's say visited, for their 50%. So here in this downtrend progression, we have a lot of zones that have been left unmitigated, and it is possible that price on the way up might revisit those zones and might provide trading opportunities around the 50%, 30%, 70% of the unmitigated zones. All right, I wanted to keep this short. We are at 12 minutes. I gave you a very brief introduction to market structure. I hope you found this useful. For information about the indicators, I have this one, the one that highlights zones in the market. It's completely free. You can find the link in the description. And once you get more acquainted with more complex concepts, you might be able to access an indicator that gives you superpowers and counts things for you, tracks everything you need to know in price. Well, we'll see that in the future. Anyway, thank you for watching. Please give me feedback. Did you like this? Would you like me to do more lessons about market structure and price action? If yes, please let me know. It's been a pleasure, and I'll talk to you soon. Ciao.